Good morning. It's already the end part of February. We had kind of a mixed market week. May corn down 4 cents, May soybeans opposite direction up 5, May Chicago wheat down 10, and May Minneapolis down 3. Problem in the corn, that's a weekly downside reversal. Started the week and made new highs and reversed lower. We made a 20% sale this week. We may regret not making more sales. April crude oil up 53 cents. April gold up $53 and the dollar down 0.056. So not a lot of movement in the other markets other than this April crude with or excuse me, the April gold with the big $53 gains, but kind of a lot of mixed things suggested here in the grains. We'll look at the charts and see why. May corn, for example, running to new highs. Our old high last May at 515, we actually ran near 517 or 18. We hit our target of pricing another 20% of 2024 corn at 515, the yearly highs. And then the problem is the market found some weakness and closed lower on a low note. So we went above the old high and closed lower on that weekly chart. Not a positive development. You can see that downside reversal on the weekly chart. It doesn't look too significant at this point, but another problem is you kind of ran into this is old support, which becomes resistance, and now here we've hit it. That is the resistance back in 21, and actually the next target in corn, if we go through that level, would be somewhere around 575, and then of course you're getting up into the $6 and $7 area. Those seem a little unrealistic given our supply and demand fundamentals. And another problem we have in corn is we're moving forward into the end of February. The USDA Ag Outlook, where they release their 10-year projections, comes out. Last year, that was very, very bearish. Basically, USDA was saying last year, we're going to have a 3 billion bushel carryout all the time in corn, and there's going to be no problem with corn supplies. You know that because corn has rallied more than the other markets, it's going to be problematic because we're probably going to see 3 million acres. I think by the end of the year, maybe even 5 million acres switching to corn, because corn at $5 or even $4.75, where the D's corn is for 25, that's more profitable than anything else. In fact, it's higher than last year at this time. So you compare that with soybeans. Yeah, we've rallied soybeans, but here's a little crack in the soybean bull market. You've probably broken that uptrend. You kind of traded up here with the corn when it tried to run to new highs, and soybeans they just look like they're losing their strength here in the latter part of this month of February. Of course, we don't have a great rally here in soybeans. Soybeans haven't run back to the yearly highs, which would be somewhere around 12 something. I mean, if we got there, we'd probably be very interested in selling grains, but in soybeans, but we're not there yet. And so soybeans are not nearly as strong. Actually, the weather forecast in Argentina keeps pillaring back and forth. There's still got a dry spot here, but you see some above normal rainfall in the coming week in southern part of Argentina. Actually, that dryness has kind of moved into the southern and eastern sides of Brazil, which could affect their late crops as well. Of course, it's cool temps in Brazil, so they're not seeing a lot of impact, but you still have very warm temps here in Argentina. This bottom panel showing the departure from normal, this red is too much heat, and this red is not enough rain on the moisture side. So you see the week 2 forecast, this continues to cool that forecast and add more rain as it did here in Argentina. If that happens, of course, you could break the drought, but I don't know if that drought will ever be broken this year in soybeans. So that's one thing that soybeans have going for it on the bullish side. Wheat continues to hold that uptrend, Chicago wheat. Of course, the Ukraine war, some huge developments this week. United States and Russia having a 4.5-hour meeting, top-level officials in Saudi Arabia. the rest of the world's crying, oh, whining because Russia and the United States are actually resuming some kind of relationship. And what an atrocity, though. The whole thing, the expansion of the last 30 years of NATO right up to Russia's borders was probably one of the foolish things the United States has ever done. And I don't know, there's still a lot of intrigue going on there, to say the least. But obviously, Mr. Zelensky insulted President Trump in the United States in their new policy, which of course he was voted in to bring into place. So very interesting developments in Ukraine. It looks like that war will likely end. The United States and Russia were going to make an end to it, in Europe and Ukraine are just going to have to accept it. The United States doesn't fund it, and NATO like if the United States pulled out of NATO, the whole issue would be mute. And maybe we should have done that in 1991. But here we are. We've had 20 or 30 years of stupidity on the part of U.S. presidents, allowing the deep state to do whatever they want. Worst example, the last 4 years, when Biden really had no mental capacity to resist them. But none of the U.S. presidents before that did, either of the two Bushes or Clinton or Obama. So probably was no much different. It seems like now we might have a thinking president. So anyway, you've got a bull market here in the wheat market. And of course, wheat is rallying because they're ending the Ukraine war. It doesn't seem to make a lot of sense. But the whole idea of Ukraine joining the EU or NATO is probably a death toll to the wheat market, because you add Ukraine, a huge producer, into the European subsidy system. It's a disaster for the wheat market because it destabilizes wheat prices a big time. I don't know if there's some reason that wheat prices are rallying with confidence the last few months. This might be the best bull market out here. And when we shift acres away from wheat and into corn, and away from soybeans and into corn, both the wheat market and the soybean market will probably find some support. This is Minneapolis spring wheat, almost the exact same trend as Chicago. In fact, you could even make the point that in this Chicago wheat, buying against this trend line support is probably a good low risk trade to take Sunday night. So that is a very interesting proposition. On the other hand, we priced corn up here at this yearly high, another 20% of corn. And actually, if we see significant follow through weakness here, I wonder if we shouldn't price all of our remaining 24 corn and start looking at pricing some of the 2025 corn, because of that expected acreage increase, and because the profitability corn prices are attracting acres away from wheat and soybeans. It's very likely that corn price is going to see some pressure. So here we are. The other market that is not showing any crack in the bull market is gold, running to new all-time historic highs, 29.53. Goldman Sachs talking about gold running to 3,100. Maybe that's the most bearish thing in the gold market right now, but the gold market has had a beautiful uptrend, and it's certainly maintaining that as we're going on into the end of February. And the last outside market I'm showing here is crude oil. Crude oil bouncing up and down here. It's got like an M formation, but obviously we've tested that support this is the third time we're going down and testing that, with the big $2 break on Friday. And actually this is starting to look like the crude oil is going to head even lower, push into this lower area. Triple bottoms usually do not work. So I'm expecting some more weakness in the crude oil market. US dollar, though, this is another bullish sign in commodities. The US dollar running to new recent lows this week. So that downtrend is definitely intact. The uptrend is broken. The 10 points we gained, we've already given back almost 4 points of it. 10 points we gained from the end of October. That was probably the most bearish thing that happened at the end of the old administration. But actually, this weakening dollar might be a very, very bullish thing for commodities indeed. So I'm going to finish up with just a little scorecard on this ECO cast corn. Maybe it's time we start selling these corn calls. You sell corn calls on 20% of your corn, you'll pay for your ECO premium, $12.72, get $12.60 if you run through the math. I mean, it makes sense. You can call our office if you have questions about this. Our risk management scorecard, I think 475 corn, we're probably at or break even or maybe above. The North Dakota crop budgets, the crop show in Grand Forks this week, my good friend Ron Haugen is projecting corn prices to average $4 cash. Well, 475 is better than that in North Dakota, maybe a 440 or 450 cash price. And he's projecting break even at $4 cash corn. So 475 is probably going to be as good an opportunity as we're going to get. We probably should be pricing 2025 corn. Maybe it's a good time to be selling those corn calls and paying for that ECO coverage, which of course puts a 95% floor on the revenue part, yield and price in your county. Not a bad deal. Wheat at 670, we're down 2 cents this week. Corn was up 2 cents on the new crop, even though it was down on the old, and soybeans was up 8 cents. We need to get to $11 soybeans, $7 wheat in order to break even, but we're not there in, we're there in corn. We're already at some profit. Maybe we should be locking it in. I wanted to talk about that risk management scorecard. Basically, I want to try and get that ECO bought so we can lock in a minimum revenue of 95% in the county. So we've essentially, by selling calls and locking in some corn, we could lock in a profit in corn. That's a good possibility. So if you have any questions about how that ECO works, you can call our cell number here or email Joan at ProgressiveAg. We're looking at ECO Plus, getting that 95% minimum in place. This is a defensive year. I think no matter what, we've just come off the mountaintop. We got a lot of ground to till up as far as the U.S. government and U.S. government policy and foreign policy. We have to basically destroy the catastrophe of the past 4 years, and it's going to take time to do that. In the meantime, we're going to build export markets, but we're going to build a stronger economy in the U.S., but it's going to take some time. So it's a defensive year in agriculture, no question. So we want to try and lock in an ECO plus to get that 95% minimum. At least we have a little risk on this year. If we can keep our risk down on this poor market year, we could be around for the good marketing years. ECO plus 5 to try and make a 5, or ECO plus 10 at 10% profit. And I think that will be possible. So it's interesting. We have a market that's fluctuating now in corn, a downside weekly reversal. Probably need to get a little more aggressive in sales. In fact, if you need to generate cash from something, corn is the best thing to generate cash from. I don't really like the sale of soybeans or wheat at this point. I think we're going to get better opportunities in wheat and soybeans, and we're going to get them later in the year when we shift acreage from wheat and soybeans to corn. The end of next week, USDA is going to give their ag outlook, and they're going to tell us we're going to plant more corn in 25. I don't think that's going to help the corn market. So there are some cracks in the bullish corn market. And maybe we'll have a little setback as USDA says we're going to have plentiful supplies of everything, just like they said last year, for the next 10 years. And that isn't going to help the bull markets retain itself, especially corn. But it probably will. It's always just a wild guess by USDA. Government officials always make wild guesses, and the markets love to resist it. So we'll have some setback maybe, but wheat and soybeans could see some more market strength as we go into spring and summer. And of course, the production season always brings uncertainty. But I do think if we want to shore up our finances for this year, we're going to have to price some of this corn if we can make a little profit and sell what we need to generate cash to start the planting season by selling cash corn, because it's not a good sale in wheat or soybeans. And I'm not even selling cash corn. We're selling the futures. If corn actually reverses and takes the futures market lower over the next few months, that basis will improve and we'll end up getting a good cash price for our corn. We hedged 5/15 May futures. And in North Dakota, we should be able to get a 475, 470, 480 cash price out of that. Maybe even higher if the basis comes around nicely. But we got to hedge the futures now and wait for that basis. And that usually can be a winning proposition. At least, what do we have to lose? The basis is already horrible. So why would we want to sell cash when we can lock the futures and wait for that basis? So anyway, some opportunities. We have the right direction going on the dollar, the right direction going on crude oil markets and energy prices. And there's some positive things. The gold market is rallying, which suggests that could be some inflation in other parts of the economy. And we have a policy now which is cutting government waste and excess, $7 trillion spending and $5 trillion revenue. What a disaster the U.S. budget is. And you would think that we'd be happy to save money, but of course, half the country isn't happy cutting government. They love government. They worship government. What a horrible thing to worship, something that has accomplished almost nothing for most people in the world. In fact, the governments in the world have killed more people in the last 100 years than anything else. Think about that and the socialism and communism ideas people have. It's a disaster every time. And if you can cut and eliminate government and expand freedom and opportunity, economic opportunity, especially liberty, mainly liberty from government and freedom from government, always leads to prosperity, not just in the United States. The United States leads that everywhere in the world. We have for the last 250 years. It'll probably continue if we can get our heads out of our butts as far as our policy. And I think at least we're on the right direction. Hope you have a great weekend and good marketing.